Crowdfunding is a way of raising money online through a dedicated investment marketplace, crowdfunding platform, or an investor portal. Let's suppose a startup, a mid-sized business, or even a large company wants to launch a product, service, or invest in a real estate project. Well, of course, they might have their own money to do so, but they can also attract alternative funding from a group of individuals or institutional investors. This way, companies will benefit even more because not only will they have the necessary funding, but also the necessary promotion, because oftentimes investors actually become the users of the product or a service, or at least help to spread awareness and attract even more investors and customers. The amount of money that companies are raising varies greatly in different countries, jurisdictions, and for different types of projects. Normally you could expect it to be around $5 million, but smaller projects might be okay raising up to $1 million. Well, and if we are talking about large real estate deals, then it could be easily around $50 million and higher, but would you still call that crowdfunding? The classic crowdfunding model involves raising money from retail or non-professional investors who would actually invest something in between $100 and up to a couple of $1,000s. To make crowdfunding campaigns viable and profitable, crowdfunding platforms may introduce minimum investment limits and work with a particular segment of users only. However, there could be large investors too, usually called high net worth individuals or institutional investors. Well, with these guys you could easily cover big chunks of the funding requirements and achieve the funding goals. Normally, crowdfunding campaigns are divided into 4 types. Donation crowdfunding is where backers support their favorite community projects, social needs, and good deeds. Reward-based crowdfunding is kinda the same, but you get some kind of a bonus, such as early access to a video game, a book copy, a t-shirt, or even a membership in a yacht club. Peer-to-peer lending is where things get a little more interesting because investors can now expect a monetary return. It's a pretty risky venture, and usually platforms tag particular projects and assign them a credit score so you can understand how likely your investment to be profitable or whether the startup is high risk and may never repay the loan. Finally, equity crowdfunding is about buying shares in growing companies or startups and expecting them to scale, grow, or exit so you can get your money back with interest at maturity. All that crowdfunding activity is going through a platform. Usually, the platform is used for the customer onboarding of both investors and fundraisers. The onboarding process means that you can register an account on such a platform and may have to attach required documents to prove your identity, income, and whatever else the crowdfunding platform may need to ensure customer satisfaction and security. The money is usually processed through a payment gateway that ensures quick and automated transactions. However, some platforms may work with invoicing, but it depends on the investor types, investment sums, and the platform itself. But are these platforms even regulated? How can you trust one? Donation and reward-based crowdfunding platforms are not usually regulated by a monetary authority or securities commissions, unlike P2P lending and equity crowdfunding platforms, because these two are actually regulated, and there are many regulation types in every country or region, for example ECSPR in Europe or funding broker-dealer requirements in the US. But it's not like these platforms have any money-back guarantees or something. What's usually required is that investment-based platforms like lending and equity crowdfunding ones, they need to have a safety fund, may not give all the money to the fundraiser immediately, and only when certain conditions are met, like reaching a 100% funding goal. And finally, they can also allow investors to withdraw from investments within 48 hours or so, but again it depends on the country and regulations. Platforms may also have some reporting requirements, but it still doesn't mean you can get your money back or something. Speaking about the actual payouts, investors can expect to make profits in the form of interest or dividends and receive that money to their bank account or card. The payout terms vary, but some platforms may pay monthly, quarterly, or yearly depending on the type of a crowdfunding platform and the campaign that you actually invested in. Well, to kind of sum things up, investors usually see crowdfunding as their diversification strategy. Fundraisers may choose crowdfunding because it allows them to promote whatever they're offering and of course get their money. Well, and the platform itself is a pretty profitable business, and if things go well, everybody benefits. There are a ton of big and small crowdfunding platforms out there, so if you wanna build one too, you will need crowdfunding software to make things work. Here at LenderKit we work with clients all around the US, UK, Europe and the MENA region and help them launch crowdfunding platforms and investment marketplaces. If you would like to learn more about the software and pricing, don't hesitate to reach out through our website, link is in the description below, and that's it for now and stay tuned for more videos.